Hi guys, welcome back. Today we'll be analyzing about Usha Martin. Yesterday, if you had watched yesterday's video, I analyzed Bharat Wires, right? So this will be, again a continuation of a same another company in the same sector, right? So as you know, I will start with the business model, then we'll go on to explain the Q1 FY24 result, and then going forward after that we will see what is the outlook and how will they execute what they've told, right? So before diving into that, before like understanding the business, the first thing we need to understand is why is this entire sector that is there. All the wire and cable, the wire and rope segment is doing really well, right? One of the reasons for that is because, of course, there has been a lot of projects and funding that the government has done, because of which companies like this are getting benefited, right? I've spoken in detail about this in the Bharat Wire video. You can check it out, right? And the second thing is, of course, all these companies are cyclical, right? And they've been into a lot of problem, in 2019 and 2020, and these people either because of debt or they have at least revamped their business or restructured their business and their book. Because of that, what you're seeing is complete re-rating happening of all these businesses. As a result, along with the re-rating of the business, the performance is also increasing and becoming better day by day, and that is why you're seeing this entire sector having a boom, right? There is a lot of there's a lot of tailwinds here, and that is the reason. So first we will I'll just share my presentation. So yeah. So the company will be doing is Usha Martin. So Usha Martin has three products, right? The wire rope, the steel wire, and of course the LRPC, right? So all these are of course used in heavy engineering, right? If you see, it is used in structures like these to build, and of course, you would have seen all these ports in the middle of the sea, right? And you need to construct all of these. You need wires, all of this infrastructure. As you can see, this is where the wires and rope is used, right? And of course, even in fishing, there are you need this high tensile strength wala wire and rope. That's where you use these kind of wire and rope. This is where their main application is, right? And if you see here also, of course, the company mainly manufactures steel wire rope, wire and strand, and LRPC. That is their value added product. I think it's low relaxation. I'm sorry, I just forgot the entire definition of it or the abbreviation. You can just look it up. But having said that, this is where you can see here. Oh, sorry. Yeah. So this is their product segment, as you can talk. And of course, they're into wide variety of industries. Can you see here? Elevator, auto, crane, construction, infrastructure. Like I told you, these are into heavy engineering, infrastructure, these kind of industries. Not only that, if you see here also, can you see the geographical segmentation? From India, they're getting 45%, and the rest 55% is coming from export, right? Whereas if you have to compare this with Bharat Wires, Bharat Wire ka 85% is coming from export, and 15% is coming from India. Whereas here, can you see almost 45%? A lot of portion of their books is coming from India here. So this is one difference. Whereas Bharat Wire is heavily into exports, these people are they have a good hold here in India also. The reason for that is, of course, Usha Martin has been here for a very long period of time, and they have a brand presence not just in India but also, having said that, in abroad also. And one of the reasons, here how the brand presence comes, right? Because it's not a consumption business, where people are flocking to buy. We're talking about an infra space. So you can ask me, like, why brand matters here. Here, when you talk about a brand, it is not an aspiration. You're trying to own a brand. Like, have you seen a consumption space? Here, brand is synonymous with trust, right? Why? Because see, when you're using these kind of wires and rope, can you see the amount where it is being used? All these wires and rope are being used in the train, in the bridges, and everything, right? So these are like huge construction work, working field. They use it there. And there, one thing, these kind of projects, you build it, looking for like how, like 100 years kind of project, so that it will never get demolished, or nothing can happen. So if something happens, again, it comes at the cost of people's lives. So as a result, what happens here? Trust becomes very important. And now, how this trust is built, of course, based on your product, right? Your product has to be really good. So this is what Usha Martin, here, this is where they come, because your product has been there for a long period of time, and because of that, they, most of the brands preferably trust Usha Martin. That's one thing. The second thing here is also we have to consider is what has changed in their business. I have covered this, why this industry, is high barrier. Why is that, there are hardly very few players. If you look also in this entire wire and rope segment, there are hardly 3 to 4 players, and the competition is always between them, right? In India, the competition is always between them. Other than that, if you see in the world also, the only countries that are exporting this is China, Korea, US. But having said that, China and Korea, are the strong players, because having said that, they have, just like India, they have cheap labor and other things, and of course their product is also good. So other than that, there is no new players that are coming every year, right? Like if you see, it's not like a biscuit company. Every year somebody can come and try to gain market share. Here it is not the case. It is just these 5 to 6 brands that are there in the top 5 category, or hardly few countries that are participating here. Like why I told, because of course, like I told you, it is very difficult to make this steel wires and steel ropes, right? Like I've covered this once again in detail in Bharat Wire ka video. You can just check it out. But having said that, the reason is, of course, right, because you're talking about a safety here, right? So this product has to like go through a lot of testing, and the engineering of the product, the technical know-how of the product information is very necessary, right? And also, having said that, the entire process of acquiring a client, right, it is very long. It can take anywhere between 3 to 5 years also. It can take anywhere up to 3 to 9 months also. The entire project life cycle also will take a long period of time. As a result, this industry, becomes very capital intensive. So because of that, it has high barrier to entry. Now, coming back to Usha Martin, if you see Usha Martin, what has improved? Like I told you in Bharat Wire, when I was explaining it yesterday, I told you the reason for Bharat Wire entire metric to change was because they were in a heavy debt, right? I told you they had taken a debt of almost 600 crores, and or 600, around 600 crores, and the cycle had turned and COVID had come, and because of that, they went into loss, and RBI had to intervene and get things sorted for them, right? And after that, of course, they've been paying their debt and everything. Cash flows have improved. Because of that, you saw that ROE, because of the entire financial leverage coming into play at a very strong pace, you saw that ROE improving, and all the other metrics also falling into place. Similarly, here also in Usha Martin, also same case has happened. Now, if you go back and see, Usha Martin was not just a company that was selling steel wires and steel ropes. So they had another, like a backward integration. Like for example, when you talk about RSCL, right? RSCL has a backward integration for forging. If you have to make a gear, you need to first get a metal and give that metal a shape, right? And RSCL has their own forging unit, so they don't have to depend on other people. Similarly, here also for Usha Martin, if you have to make steel wire and steel rope, what do you need? The first thing you need is the steel. So they had their own steel plant, right? But unfortunately, the steel plant wasn't working in their favor. Like the sales weren't doing great. Of course, it was a completely slump, and it kept dragging their balance sheet and everything. All the possible problems you could imagine with that company used to happen there. And because of that, the entire balance sheet or the entire company came into debt, and it was under a lot of stress. And because of that performance, even the Usha Martin ka steel wire and rope ka segment also started underperforming. So what they did in 2020, they sold their business to Tata. They sold their business to Tata Steel, and as a result, they ended up deleveraging their balance sheet, right? So that is one thing. Since they sold that business off completely, they could focus here, only here, and whatever that the debt and everything was there, it got taken care of. That is number one thing. That is why you would see Usha Martin ka debt also has decreased. If you compare it to last 2 years, it has decreased significantly. That is one thing. The second thing is consolidation. Now, what do I mean by consolidation? You have to change your entire product mix, right? If you see, I don't know if I have that. I don't have the screenshot of that, but Usha Martin has 3 categories. One is the steel wire, one is the steel rope, and the other one is your LPCR. If you talk about it, it's here. One second. Yeah, can you see here? Steel, wire rope, wire and strand, LRPC, and others, right? If you see here, this wire and strand and LRPC have a little bit of low margin compared to wire and ropes, right? Even in wire and rope, if you talk about, there are two kinds. One is the general rope, and the other one is your specialty rope. General rope, on the other hand, it has very low margin, like 12 to 15%, whereas the specialty ropes have high margin, like around I think north of 25 to 30% in that range. So here, what they're doing is they're changing the product mix also. So they're focusing, their plan is to, increase this wire and rope segment as much as possible, and keep decreasing this wire and strand, and the other segment, LRPC segment, right? So this is what they are working on, two things, and this is also shaping up. On top of that, along with that, they're increasing the capacity, they're adding plants, increasing the capacity utilization, all of this. So when you do all the three things are happening, that is why you're seeing this business being turned around, right? Like we saw in Bharat Wire, turnaround happened because they took control of their debt, and they restructured their debt. Here the turnaround happened because they sold their steel car business, changed their product mix, trying to change their product mix, and of course they are also adding more and more capex and trying to cater to the demand that is there. So this is the reason that you see, Usha Martin ka, the entire play that is happening, right? Like, and that's the same thing I have mentioned. The other thing also, one of their advantage they have is that fact, since they sorry, since they sold their steel car business, right? Of course, earlier they had a backward integration. You can tell me, like, now don't you think, since they don't no longer have that backward integration, that plays out of their hand, because now they'll have to pay a premium every time, or as the steel prices increases, even they will face a, they will face an effect. So I think, until, I'm not sure exactly about the year, but I think until 2024 they have a deal, with the company, telling that, with I think the Tata Steel company, that 50% of the, of the steel that they need for their operations will be supplied through them at a certain price, and the other 50% that is there, they will, they will find it domestically from India itself, and thereby, of course, trying to adjust the entire steel ka price, that upar niche ka bhav jo hota hai, that one, right? So that is the entire business of, like Usha Martin, like what they do, what is your product category, and what, why is the whole reason you're seeing this entire turnaround story happening here, right? Now let us see, and that is the same thing I have tried to explain here also. Uh, yeah. So another thing, yeah, also, how is this related to ROE? If you have to see, if you see the ROE of the company, as you can see, has been increasing from 19, 21 to 25, right? It has been increasing. Now, if you actually see, the ROE has three components, right? One is the volume, which is your asset turnover. One is the value, which is your margins. And the other one is, of course, your financial leverage, right? If you see here, all the three are coming into play. How is it so? Like, for the first thing is the financial leverage. Let's talk about it. The financial leverage came from here because they, what is that? They sold their steel car business. Of course, the balance sheet became better and everything, right? Because of that, they got one boost. The second boost is from value. Value is coming from here, consolidation. Like I told you, they're moving more and more into wire rope businesses, especially the specialty wire rope, where the margins are higher, right? That is the second area where the ROE ka boost you're getting. The third area is the volume. Volume is coming from what? Growth. Of course, right? When you talk about value, at the end of the day, there is a little bit, there is a little bit limit here. But here, as you can see, the volume will come when you keep adding the extra capacity, keep increasing your capex. With that, the volume will come. So if you see, can you see here, volume, value, as well as the financial leverage is coming, which is all of them are coming together, all of them are acting together, and hence you're also seeing the ROE improving every quarter or every year. As you can, you see here, it has improved from 19 to 21 to 25%. So that is that is where they're headed. So so what is the outlook, and what, and let's just later go to the result and see. The first thing is, yeah, you would have, yeah, the first thing is, let's see how the company has performed in Q1 FY24, right? That is the current quarter. You would see that the revenue has been down like 4.8% QOQ, and it has been up 7.8% on a year-on-year basis. Now, please don't go aghast after looking at the QOQ numbers. You can't compare the QOQ growth, because Q4 for any of the steel, wire, rope and businesses, Q4 is your best quarter, and Q1, is a lean quarter, just like how Q2 and Q4 are lean quarter for a footwear business, and Q3 is Diwali. Like that, Q4 is their Diwali season, right? So that is why don't compare on a quarter-on-quarter basis. If you see, on a year-on-year basis, they have grown, right? The PAT has grown again on quarter-on-quarter basis and down. Here, if you see, Yeah, I wait. You know what? I'll cover this a bit later because then I can do peer-to-peer comparison with Bharat Wires. Let me just tell you the outlook and capex. Yeah. So the first thing is when you talk about the outlook and capex, the company is targeting a 15% ka CAGR ka growth, right, every year for the next 2 to 3 years, and an EBITDA margin of 18%. That is where they want to sustain their margins, right? And of course, like I told you how the ROE will improve and how I think the current level of ROE is around 20%. So you know how the ROE will also will also play here, because like I told you, their capacity, the volumes will come, and with that, the again more of the wire ropes will increase. Because of that, you can see the ROE also being increasing, right? And of course, they want to be a global leader in the steel wire segment. Here also, if you see, currently, like I told you, they have 45% coming from India and 55% from the export. In India, they actually have a market share. I think they have around 60 to 65% ka market share, whereas in I think they're in international markets, when you talk about, they have 5% market share. And of course, there is a lot of headroom and lot of growth in the international market for them, right? That is one thing. This I remember reading in the recent con call, the Q1FY24 con call, right? That's one thing. So here, let us see, when you want, because see, we need volume growth that comes from here. Let us see how the volume growth will come, like what are their capacity or the capex that they're doing, and how they plan to increase it, right? They have planned a three-phase capex, right? Like phase 1, phase 2, phase 3. The first phase will happen at Ranchi, right? And this phase has already been, it's completed. It's already taking shape, and it will be completed, like completely, by Q3. And you can see, adding it to the top line, and this will produce around 30K tons. The second phase that is there, it is also in Ranchi, but that second phase will take 2 years to be completed, and that capex is around 167 crores, and it will add around 10K tons of capacity. This phase one, I think it is around 60 to 70 crores of for phase one at Ranchi, and I think that is already completed. The phase three that is there, the phase three program that is there, it's costing them 62 crores, and this is also this is not in Ranchi, this is in Thailand, and there they're doing, it will be completed by FY24, and of course this will also add around 3K tons. As you can see, totally, if you see, around 43 tons per annum. This is what they this is the amount you can expect, the metric tons you can expect from all of these capex coming forward, which will of course give again boost to the volume growth, right? And all of these capex are being again funded by internal accruals. There is no debt that they're taking. That's one thing, right? So first, then now let's see how this 15, how they have performed, how they have performed this quarter, and we will do a peer-to-peer analysis um, with Bharat Wires. If you see, of course, the revenue is up 7.8%, whereas the PAT, has been down on a 4.3% year-on-year basis. Now, here is the thing: the reason for this PAT being down is one of the reasons, or even the sales being down is there is an aspect of seasonality here. Like I told you, Q1 is a bit leaner, and of course, monsoons. There are certain types unseasonal monsoons, and because of that, you're seeing here. Whereas at the same time, you would have seen Bharat Wire has done a growth of 20% on a year-on-year basis, and their PAT has grown by 90% on a year-on-year basis. They've got a lot of boost because they're trying to clear the debt and everything. The boost has been a lot, right? So that is where. And the other one is also the PAT being that high is also, I think, they have already completed their capex also, Bharat Wire. The other thing is PAT margin. The current PAT margin has improved, of course. The last year it was 10.8, now it is 12.3. On the other hand, Bharat Wire has a PAT margin of 19%, and it has expanded a lot. I think it was earlier 9% or 10%, and now it has been 19% on a year-on-year basis, of course, right? The other thing also I would highlight is EBITDA margin has improved from 17.9 to 15.5, whereas in Bharat Wire, the EBITDA margin for this quarter is at 26%. And if you listen to the con call also, you will see, you will hear the MD talking about it, how they plan to maintain the EBITDA margin at 26% plus or minus 2% here and there for the entire year. Because having said that, you understand that this is a cyclical industry. It is unsustainable also to have this kind of margin, because usually their margin is around 13 to 15%. But if you just listen to the con call, you will see how confident the management is, like, of sustaining this margin, right? So this, on all this metric, when you see, Bharat Wire of course has performed better compared to Usha Martin, right? The other thing I would also like to highlight here is, if you talk about volume growth, um, yeah, I haven't. I haven't added the screenshot of that. Oh yeah, it's here. Yeah, yeah. If you see here the volume growth also, right? This has been like, how do I tell you? Wire rope. Yeah, this when you see the segmental also, like, they are well on track. Yeah, they're well on track with the entire, like I told you, right? They want to go into more of the value added products like wire rope, wire and strand, and LRPC. Like, they want to like decrease this and increase the wire rope segment. If you see here also, can you see on a year on year basis it has increased by 15%, right? That is good. This too, of course, because they want to, as much as they want to reduce it here. So of course this is in line with it. Having said that, yeah, I have not. Yeah, I'm sorry for this, but I haven't added the another chart, which gives the entire volume. Irrespective of not just category, but the entire volume. But if you see that the entire, when you see the volume that is there, that has reduced. Like, not if you take the all the volumes that is there, it has reduced by I would say 4.8% on a year on year basis. Now, of course, the reason for this, the management is like, seasonality factor of the business, and other things. But having said that, at the same time, this quarter, you would see that Bharat Wire has done a volume growth of 10% and also a 5% ka volume growth. That is why you saw that their revenue has increased also at that rate, right? Here, on the other hand, Usha Martin has, the volume growth for this quarter is, at least when you compare on a year-on-year basis from last year to this year, it has been down on I think 4.8% level. And of course, the management blames it on the seasonality aspect of the business, right? So having said that, but for me right now, like, when you see Bharat Wire has done much better than Usha Martin, but but these are two different kind of plays. Yeah, let me just stop this. Yeah, these are two different kind of plays. I'll tell you one is because Bharat Wire is coming out, out of this whole debt ka thing that is happening with their company. And they're starting from a very low base, right? Extremely low base, just like how the consumption company started in 2021, because they were comparing everything to 2020, right? So low base ka thing, same thing here also, right? And there everything is you're seeing a complete re-rating happening over there with the company. Whereas with Usha Martin, they don't have a low base here, right? The company has been performing really well since a long, it is a brand. Actually, if you compare it, in the US, if you see, there is a brand called Branton Shaw. That is the number one brand when you talk about wires and rope. And they're as equal to that brand also. Like, I think the only difference is when you talk about the steel wire rope, it comes in a bundle, or as you call it, the reel or rim, right? So there, those that Branton Shaw makes 400, I think, tons or something per that thing, whereas these people make 300 to 330 tons per reel, or reels per ton, something like that, right? So that is it. So they're actually, a great competitor there. And of course, like Usha Martin, having said that, you're not playing a re-rating ka game here. You're playing the game of, adding capacity, increasing the capacity, increasing the volume and value growth. There you're getting volume, value plus the re-rating. So at the end of the day, although both businesses are catering to the same segment, they're in the same industry, the play that are happening is completely different, right? And that is why you see here also, if you see Usha Martin ka market cap is way higher, right? Like, compared to Bharat Wire, right? It is also one of the reason is because this Usha Martin has a larger base. And not only that, of course, that they have been here, the play that I told you is completely different, right? So that's that. But having said that, you do understand, right? When you talk about the whole volume, value, and everything, if you see all the other metrics also, like Bharat Wire, at least on this quarter, you would see that it has performed really well, right? So that's that about Usha Martin and Bharat Wire. And yeah, I hope to see you tomorrow with another business. Yeah. Until then, take care and have a nice day. Bye bye.